So let me be completely straight with you. Becoming a mortgage advisor is not the hardest thing you're ever going to do in your life, but it will absolutely feel like it at certain points. And the reason most people struggle isn't because the industry is too complex or the exams are too brutal. It's because nobody gives them the honest picture of what the journey actually is going to look like before they actually start. They find out about CMAP from a YouTube video or a forum post, they get excited, they order the study materials, and then 3 weeks in, they're sitting at the kitchen table, 10 o'clock at night, staring at the page about loan to value ratios, wondering what if they've made a terrible, terrible, terrible mistake. That moment, that specific moment, is where most people mentally just quit. They clock out. And not because the material is impossible, because they didn't know what was coming and they had no framework for getting through it. So in this video, I want to give you the honest, structured picture of what becoming a mortgage advisor actually involves. The difficulty curve, the emotional reality, and the simple approach that makes the whole thing far more manageable than it first appears. By the end of this, you're going to have a clear view of the 3 stages every new mortgage advisor goes through: the qualification, the first client phase, and the confidence building phase. You'll understand what genuinely is hard, what feels like hard, and more importantly, you'll leave with the framework that removes the overwhelm so you can actually make a decision and take action. Because here's what I've noticed working with people in this industry. The problem is never a lack of intelligence or capability, ever. It's a lack of clarity. And when you remove the confusion, the path forward becomes obvious. So stage 1 is the qualification. So let's start with CMAP because that's where most people begin and where a lot of people's fear actually lives. CMAP stands for Certificate in Mortgage Advice and Practice, and it's the most common route to becoming a qualified mortgage advisor in the UK today. It's split into 3 papers and you need to pass all 3 of them to become fully qualified. Is it difficult? Genuinely, it really depends. If you studied for professional exams before, you'll find the structure really familiar, even if the content is new. If you haven't sat an exam in years, the first few weeks can feel like you've been dropped into a foreign country without a map. Honestly, it is, that's how I felt anyway. You see, the content itself is not wildly complex. It covers mortgage regulation, application processes, the difference between types of products that are available, repayment methods, protection, and compliance. None of this is designed to catch you out, by the way, none of it at all. But the volume of the information, particularly in paper 1, which covers financial services landscape as a whole, that can feel enormous, okay? When you actually first encounter it, I remember thinking, what on earth is a gilt? And trust me, we've all felt that way. So here's the real problem you see, is that most people study in the wrong way. They read passively, they highlight things, they feel like they're making progress, they sit a mock paper, score 40%, and then realize that's demoralizing. And it leads to that kitchen table moment I just described earlier. Now, the fix here is really straightforward. Past papers, repetition, and active recall. You'll learn the mortgage industry by testing yourself on it, not by just reading about it. So set daily study blocks, keep it consistent, work through practice questions every single day, every day. And the material, it will start to stick. Most people can pass CMAT within 3 to 6 months of consistent, structured study. Now, that's not a long time when you actually think about it, where it can take you from an earning potential and a lifestyle. See, the exam itself is multiple choice. You're not writing essays or being grilled by some interviewer. You need to know the material well enough to be recognized that you know the right answer. So is it achievable? Absolutely, but only if you treat it like a system, not a subject. Then you have stage 2, which is that first client phase. So this is where you've passed, you're qualified, and now here's where the different kind of difficulty arrives. You sit in front of your CRM on day 1 and it's completely empty. No clients, no pipeline, no inquiries. Or if you're working self-employed under a network or a firm, there's nobody handing you business, okay? And it's yours to build alone. This phase trips people up because the confidence they built through passing the exams doesn't automatically transfer to client conversations. You might know about products inside out, but knowing how to structure a discovery call, how to explain your fees without apologizing, how to introduce protection without the conversation going awkward, that's a completely different skill set entirely. I see this specific bit all the time. A newly qualified mortgage advisor who is genuinely intelligent, they're smart, they're really motivated. They sit across from their first potential client and completely freeze. And when the person says, so what do you charge? They stumble, they over-explain, they almost talk themselves out of a fee that they've absolutely earned. You see, that's not a knowledge problem at all. That's a process problem. You don't have a script, you don't have a structure, you're winging it and hoping it lands. Now, the answer to this is actually pretty simple, and I want you to write this one down, okay? It is to build your first conversation framework before you ever sit in front of a client. Know how you're going to open, know how you're going to ask the right questions to understand their situation, know exactly when and how you're going to introduce your fee. Practice it out loud, on your own, in the car, until it feels natural. Not perfect, natural. Your first 10 client conversations will feel uncomfortable regardless of how well prepared you are. It doesn't matter. That is completely normal. It's part of the learning curve. But advisors who have a framework, they recover very quickly from that discomfort. But the advisors who don't, they tend to avoid putting themselves in that situation again, which slows everything down to a snail's pace. See, when it comes to getting those first clients, don't overcomplicate it as well. Your first leads are almost always going to be from your existing network. So friends, family, colleagues, people who already know and trust you. Let people know you're qualified. Be specific about who you help and what you do. You don't need a polished marketing strategy on day one, but you do need to have a few conversations that lead somewhere. Build from there. Then we have stage 3, which is the confidence building phase. Now, here is something that does not get talked about nowhere near enough, in my opinion. Even after you've got your first few clients, after you've submitted your first mortgage and you see it through to offer, which is great, there is still a period where imposter syndrome sits quietly in the background, gnawing away at you, okay? You'll second guess your advice, you'll Google things you already know, and just to reassure yourself, and you wonder if the slightly more experienced advisor that you know would have handled that case differently. That feeling is completely normal. I still get that at times. It doesn't mean you're not doing something wrong. It means you care. Now, confidence in this industry comes from repetition and process, not from experience alone. The advisors I see who build genuine confidence quickly are the ones who treat every single case the same way, the same structure, the same questions, the same approach, because consistency creates certainty. And when you know your process works, you stop questioning yourself at every single stage. See, the advisors who stay anxious, they're the ones who are doing different things every single time. They're reacting to whatever the client is bringing up rather than leading the conversation themselves. And leading the conversation, that is the key bit. You are the professional. You have the knowledge. Your job is to guide people through one of the most significant financial decisions of their entire life. And they need to feel that you are calm and that you're in control. The way you achieve that, though, is through structure, not through ego or bravado. That's not going to do it, okay? There's also the compliance piece to think about, which causes real anxiety for a lot of new advisors. The fear of doing something wrong, misadvising someone, missing a protection need, getting a fact finding complete, all of that stuff. And I want to address that directly. Compliance anxiety is healthy in small doses because what it does, it keeps you careful. But it becomes a problem when it stops you from actually progressing cases or having conversations. The way to manage that is really, really simple. Follow your process, document everything, and lean on your network or principal firm when you're genuinely unsure, okay? You're not expected to know everything on day one. You're expected to know where to find the answers. So, is it difficult to become a mortgage advisor? Here's my honest answer. The qualification is manageable with consistent, structured study. The first client phase is uncomfortable but completely navigatable with the right framework, and the confidence phase is gradual, but it does accelerate dramatically once you have a process you trust. You see, the difficulty is real, but it's not unsurmountable, okay? The people who struggle most are not the ones who are the least capable, they're the ones who are the least structured. They're approaching each part of the journey without a clear plan, reacting instead of preparing, and then wondering why it feels so hard. The people who progress fastest, though, they're the ones who aren't necessarily the most talented, they're the ones who are the most consistent. They study every day, they practice their conversations, they follow a structure, and then what they do is they refine that with every single client they speak to. That's it. That's the whole game. Now, if you want to know how mortgage brokers get paid and how it actually works and the income structure, check out this video I wrote down on screen right now. Give it a click.